If you're a married same-sex couple with any assets, a house, retirement accounts, life insurance, there's a tax law that could save your surviving partner over $5 million. But almost no one in our community knows it exists. It's called estate tax portability. When the first spouse dies, they can pass along up to $13.99 million tax-free. But if you don't file one specific form within 9 months, your surviving partner loses that exemption forever. And that mistake can cost your family over $5 million in unnecessary taxes. I'm going to show you exactly what portability is, why same-sex couples are especially at risk, and the one form you must file to protect your wealth. Here's why this matters right now. Same-sex married couples have only had access to portability since 2015, less than 10 years. Before Obergefell, we were completely shut out. Straight couples, they've had it since 2011. And because this benefit is so new to our community, there's almost no education about it. Financial advisors who've worked with straight couples for decades know to bring this up automatically. But for LGBTQ plus clients, especially those who married recently, portability often doesn't even enter the conversation. Let me show you what this looks like in real life. Two women, married 5 years. One partner dies unexpectedly. She had a $2 million life insurance policy, a $500,000 retirement account, and they owned a home worth $800,000. Her half of the estate, $1.9 million, well under the exemption, so no estate tax owed. The surviving partner thinks everything's fine. She doesn't file any extra paperwork. Fast forward 20 years. She's built wealth. Her estate is now worth $18 million. She passes away. Here's the problem. Because they never filed for portability, she only has her own $13.99 million exemption. That means $4 million of her estate is taxable. At 40%, her heirs owe $1.6 million in taxes, money that didn't need to be lost. If they'd filed that one form, Form 706, she could have claimed both exemptions. $27.98 million in total protection. Her $18 million estate would have been completely tax-free. One missed form cost the family $1.6 million. And that's not even the worst case. When estates hit $20 million, $30 million, that's when losses can exceed $5 million. Let me break down what portability actually means. Every U.S. citizen gets a federal estate tax exemption. In 2025, that's $13.99 million per person. When you die, the first $13.99 million passes to your heirs tax-free. Anything above that? Taxed at 40%. Here's the magic. If you're married and your spouse dies first, you can inherit their unused exemption. This is the Deceased Spousal Unused Exemption, DSUE. Say your spouse dies and only used $3 million of their exemption. You can port over the remaining $10.99 million to your own. Now you have $13.99 million plus $10.99 million. That's $24.98 million in total protection. If your spouse didn't use any of it, maybe because everything passed directly to you, you get the full $13.99 million added to yours. Combined, $27.98 million. This isn't a loophole. Congress created portability in 2011 to protect surviving spouses. But portability is not automatic. You have to file Form 706, the estate tax return, even if you don't owe estate tax. And you have to file within 9 months. You can get a 6-month extension, so the absolute deadline is 15 months. Miss that deadline? You lose portability forever. The IRS doesn't send reminders. Once that window closes, there's no way to get it back. Now here's why same-sex couples are especially vulnerable. Most same-sex couples I talk to have never heard of portability. And that's not their fault. We've only had access for less than a decade. The educational content that exists for straight couples just doesn't exist for us yet. But there's a deeper reason. Many of us don't have traditional family wealth structures. A lot of LGBTQ plus people don't inherit from their families of origin. Maybe because of estrangement. Maybe because we were written out of wills. Maybe our families just didn't have wealth to pass down. When we build wealth, we're often starting from scratch. First-generation wealth builders. We don't have the institutional knowledge that gets passed down in families that have been wealthy for generations. Straight couples whose parents had estates might have heard about portability from family attorneys. But for many of us, we're figuring this out alone. And here's the insidious part. Same-sex couples tend to live in higher-cost areas, places that are more affirming and legally protective. So we're more likely to have assets that push into estate tax territory. A couple in San Francisco or New York might own a $2 million home, have $3 million in retirement accounts, and carry $2 million in life insurance. That's $7 million in assets that can grow significantly over time. These aren't ultra-wealthy people. They're middle-class couples who worked hard and invested wisely. But without portability, their heirs could face massive tax bills. There's one more layer almost no one talks about: remarriage. If you're a surviving spouse and you remarry, you keep the DSUE from your first spouse and eventually claim your second spouse's exemption when they pass. But you only keep that first spouse's portability if you filed for it when they died. Skip the filing, then remarry? You've lost it. This is especially relevant for LGBTQ plus people who might have been in domestic partnerships before marriage equality, legally married their partner later, and after their spouse's death are considering remarrying. The rules are complex. Without proper planning, you can forfeit millions. So here's exactly what you need to do. First, file Form 706 within 9 months, or 15 with an extension. Even if your deceased spouse's estate is under $13.99 million, you still need to file to make the portability election. This is not optional. Form 706 is over 30 pages. It requires detailed valuations of every asset: bank accounts, investments, real estate, life insurance, retirement accounts. This is not DIY. You need an estate attorney or CPA who specializes in estate tax. Preparation costs typically run $5,000 to $15,000. Yes, expensive, but compare that to losing a $13.99 million exemption. Second, keep records forever. Once you've made the election, keep that Form 706 for life. When you die, your estate needs to show the IRS you properly claimed the DSUE. Store it digitally, fireproof safe. Give a copy to your attorney. This document is worth millions. Third, update your estate plan. Portability doesn't eliminate the need for planning. You still need an updated will, potentially a revocable living trust, powers of attorney for healthcare and finances, and proper beneficiary designations. And if your estate is growing through home appreciation, stock gains, business success, revisit your plan every few years. The exemption is indexed for inflation, but it's also subject to legislative change. Under current law, the exemption drops to around $7 million per person in 2026, unless Congress acts. If that happens, portability becomes even more critical. Let me show you the math on a real scenario. Meet Alex and Jordan, married same-sex couple in Seattle. Alex is a software engineer, Jordan's in marketing. They own a $1.8 million home, have $4 million in combined retirement accounts, and Alex has a $3 million life insurance policy through work. Alex dies unexpectedly at 58. Their estate, $5.9 million, well under the exemption, no tax owed. Jordan doesn't file anything. No tax due, so why bother? Big mistake. Jordan lives another 30 years. The home appreciates to $3.2 million. Retirement grows to $9 million. They inherit another $2 million. Total estate, $14.2 million. Without portability filed when Alex died, Jordan only has their own $13.99 million exemption. That means $210,000 is taxable. At 40%, $84,000 in federal estate tax. But let's say the estate grows to $25 million by the time Jordan dies. Without portability, $11 million is taxable. That's a $4.4 million tax bill. With portability, zero tax because the combined exemption is $27.98 million. Filing Form 706 when Alex died would have saved their heirs $4.4 million. That's the power of this one tax move. Now here's what you need to understand. Portability is just one piece of the puzzle for same-sex couples. There are other strategies: QTIP trusts, spousal lifetime access trusts, how to structure assets to protect a non-biological parent's relationship with children. If you want the full picture, I've got a video called 9 Legal Documents Every LGBTQ plus couple needs. It covers the 5 essential documents that marriage alone doesn't give you. I'll show you the exact protections you need if you're unmarried, if you have chosen family you want to provide for, or if you're navigating parental rights as an LGBTQ plus couple. Because here's the truth. The legal system wasn't built with us in mind. It's been retrofitted to include us. And that means there are gaps, loopholes, and traps that straight couples never have to think about. But when you know what to look for, you can build a fortress around your family's financial future. If you found this helpful, hit subscribe. I'm building the largest library of LGBTQ plus financial education on YouTube. New video every week. Let's make sure our community has the knowledge to build and protect generational wealth.